talk about increasing our chances of winning more trades and overall increasing our win rate. Now, I had a goal that I made for myself this year, and that was to limit the number of trades for one that I started taking. So that helped increase and my win rate for one. But also what I started doing was instead of taking so many scalps, I was looking for more quality setups that will allow me to take runners just as well. So instead of taking 3, 4, 5 trades a day, I started to narrow down and just looking for maybe 1 to 2, no more than 3 trades a day. But I started focusing more on the pre-market session. That's before the U.S. session opens up, meaning the New York sessions, okay? I found there are better opportunities because whatever which way the market is moving, primarily 2 hours before the actual New York session opens, it tends to move in that direction. What you'll see typically after 9:30 bell rings, somewhere between there and 10:30, 11 o'clock, the market will kind of shift and we get a lot of faking out to where it may turn, reverse, and start moving in the opposite direction. Now, I'm not saying that happens every single day, but you will find on your charts where it does happen more so than not, okay? So, increasing your chances of winning more trades, I would recommend, because this is what I do, and I'm not telling anyone to follow this, but just take a look at your charts. Give it a try. Back test it yourself, and then maybe even demo it. I'm not saying trading with your live funds or your funded account. I'm just saying what you're possibly going to find is that if you take the 2-hour time frame, typically between 7:30 and 9:30, and maybe not at right exactly 9:30, maybe 7:30 to 9, because around 9:15, 9:20, things start to the volume kind of starts picking up. And things start to get a little bit more volatile as well. So try to stay away, those few moments before the actual market opens up. The New York session does. So, and you will see if you're looking for opportunities to trade supply and demand, because that's what I trade, supply and demand. But maybe you trade support and resistance, or whatever your style of trading is and strategy you use. Look to see, back test to see, do you come out better taking trades pre-market, meaning before the New York session opens up, or after it does? I particularly find, and that's why I wake myself up earlier now to get in front of my charts, because I just find it's more opportunities. But not just that, the benefit of doing so as well is the fact is that trading, we don't have to do it, from 9 to 5 like a full-time job. 2 hours a day is enough. Sometimes just an hour a day, and then sometimes we can make one good setup and be done within 30 minutes. And I find that happens between that time period, between 7:30, 9-ish, a little bit after the great setups, because again, the market is moving particularly in the same direction. So if I'm looking to take a trade at a demand zone where the market's pulled back, if the market is already moving, say, bullish to the upside, okay? And even in counter trend trading, but I'm not going to talk about counter trend trading unless you really have experience in doing so. All that is looking at to see what the higher time frame is doing, and then maybe you see that it's bullish, and the higher time frame or the higher base chart is going to move and look to be bullish over a certain period of time. But on a lower base chart, you may scale down to and see that it's actually breaking structure lower and give you an opportunity possibly to go short, right? But anyways, what I'm trying to say is that whatever your chart is actually doing and showing you, all right, and within that window there, pre-market, all right, it's particularly going to trade in that defined movement, whether it's to the upside or to the downside. So I like to trade pre-market more so than the U.S. session. Now, I'm not saying that I won't trade, and I still do trade during the U.S. session, or the New York session, but I'm looking to particularly see after it opens up. I got about an hour time, or a gap there, maybe about an hour and a half depending. But if I'm going to trade after the 9:30 opening, okay, the New York session opening, for one, I'm waiting like 15 to 20 minutes, okay? And what you'll find is that maybe within that first hour between 9:30 and 10:30, you may find one good setup. And that's typically after the market has really opened up and it starts doing, the fake outs where it's going to the tops, grabbing liquidity, or going to the bottoms, grabbing liquidity. They like to do a lot of funny movement to stop traders out, and then they're going in the intended direction. So if we are, say, for example, bullish leading up to the opening of the New York session, once the bell rings, what you'll see is it normally may push up a little bit to fake traders out, and then it breaks down to the downside. It does that to grab liquidity from below, and then it may continue pushing to the upside for about an hour, and then it may turn back around, reverse, and start moving to the downside. But we also have to take into consideration too news prior to the market opening up or news after the market opens up just as well. But you need to pay attention to what happened. A lot of times what you'll see is that the market, like say during the London session, it may be moving a certain way. And then, when we get into the pre-market hours right before the New York session opens up, and that's typically the 2 hours before it does open up, it will start to move in a different direction. Okay, maybe it was bullish London, and then we start to form bearish during the pre-market session to where it's making movements to the downside, or vice versa. Okay, you'll see a lot of that, but the market's going to do what it wants to do. That's not always going to happen. So what I'm here to really say is that for me, for example, is I'm finding more so that I'm having more success, and I'm increasing my chances of winning more trades during that 2 hour mark of 7:30 to right before 9:30, and then maybe that hour after the market opens up, you may find one good solid setup after the fake out happens. And when volatility starts stepping in at that 9:30 bell, the market's going to do some crazy stuff, and a lot of fake outs happen. And then once it makes its decision which way it's going to move, then look to take an opportunity to trade, supply or demand. So if the market is bullish, say for example, then all of a sudden the bell the market opens, and then it just flushes to the downside. A lot of people start thinking that, the market's moving the opposite direction now, let me start looking to go shorts. But all they're doing is pushing to the downside to stop traders out, that were buying pre-market, say for example, then it flushes them out, and then it continues moving in the same direction, maybe for an hour, and then all of a sudden you may see the reversal happen to where it takes a bearish standpoint. So just like an example right here, we see the market, overnight session, London pushing to the downside, and then we get a slight correction to where the market looks like it's bullish going to the upside here, pre-market, right, moving into more so the U.S. hours or U.S. session hours. And that's before the New York session opens up, okay? And then when the market opens up, we get a push to the downside, all right? The grabbing liquidity from below possibly. Let's look to see. If we move lower here, we can see where the market pushes down, grabbing liquidity here, and running some areas, down below here, okay? And then the market turns back around, and what does it do? It starts pushing to the upside shortly after 10 o'clock, all right? Starts pushing back to the upside, and then, you can look for some opportunities once we start moving to the upside and breaking structure to the upside to areas where there may be key areas of demand. For example, here, once we get the push to the upside here, like right here, this was a beautiful area. Market pushed up, broke structure, pulled back, key area of demand right here, and then it broke higher, okay? So that's what I'm talking about, is like, I prefer to maybe look for one key or solid trade setup, or maybe two during the pre-market session. You may not be able to get into a few doing pre-market unless you're really moving down to or scaling down to really smaller time frames or smaller base charts. I more so like to look for maybe one key setup there in the pre-market session, and then one during the after the session opens up, looking for one solid trade setup. Because again, whatever direction the market is kind of moving pre-market within that 2 hour time frame between 7:30 and 9. It kind of moves in that same direction. And then once the session opens up, they like to do a lot of faking out, and then the market comes down or goes up, grabs liquidity, and then it starts to trend in a direction which it tends to want to move. And then that's when I say, okay, if I get a great setup, then I'm going to look for the opportunity to trade in that intended direction. But about 10:30, around 11 o'clock, some funny things start happening where the market may start moving in the opposite direction. So anyways, like here's another good example here. We came out of, this is on the 12th, this was Friday, all right? The market was overnight session into the London session. You can see here where it pulled back here, but then it pushed lower. And this was news right here. I believe we had news on Thursday, it's Friday on Friday. And then the market starts to turn back around, all right? So, again, like I said, London may be doing one thing, and then pre-market into the opening session could be doing something totally different. But in this case here, the market continued pushing to the upside. You get that first hour after the market opens up, you can see at the 9:30, the market was doing some funny stuff here. It was moving sideways right here. Then it found its direction. Okay. All right. And then here, let's see. Not well. If it'll pull back right here, well, this is 12 o'clock, so no, I wouldn't have been, trading around that time frame. But again, within that first hour, look for something to actually happen, and then after that, you may want to shut it down. But again, that 2-hour window, 7:30 or to 9:30, I would stay away from, right around 9:30, maybe 9:10, 9:15 to be looking to get out of a trade if you are in one. Look for good trade setups surrounding, quality supply and demand zones or setups that you could possibly take, or maybe even a liquidity setup, a liquidity grab, a liquidity sweep setup, or maybe trade support and resistance. But look for opportunities there, because the market is going to, it doesn't do as much faking out during that time frame as it does when the market opens up. All right. Once the market opens up 9:30, they know a lot of people are stepping into the market, retail traders, and they really start faking the market out, meaning moving the market in a certain direction. The overall goal and the aim is to grab or to take out liquidity. So they know where people or traders have their positions or took trades at, or holding positions, whatever the case is. They're going to try to stop you out. All right. And then they may continue taking the market in a certain direction. You don't see as much faking out and craziness going on, pre-market, those 2 hours that I talked about. So look to see if you can get yourself up, all right, a little bit earlier and get into the market and just be patient and look for high quality setups. And if you can get in one good trade, that may be all you need to take, especially if you're someone that's looking to possibly trade part-time and then you work maybe a 9-to-5 job and you can get up. Maybe you're already up preparing yourself for work. You look at the charts, 7:30, before you leave the house to get to the job, 8 o'clock to, whatever the case is. You got some time there to try to get into a nice solid trade. And I'm going to tell you, typically on just about every day of the week, you're going to find at least one good quality setup on some particular market. And most time, whatever your favorite market is, you'll find a good quality setup, especially on the NASDAQ, or anyone that trades any of the indices. It could be, the Dow or even maybe the ES, but you'll find a good quality setup. All right. Maybe you may have to look at or look at a couple markets, a couple maybe say indices, whatever the case is, and just have them up, and maybe you find one good quality setup that you can actually take during that 7:30 to 9:30 time frame. So I just want to talk about that today because that's what I'm kind of focusing in on. Remember what I said, as traders, we have to adapt to the markets and change as well. And there's nothing wrong if you can only trade during the opening session there at the New York at 9:30, and again, I wouldn't spend all day trading in the markets. A lot of people are glued to these charts all day long. Look for a few setups, maybe 1, 2. I wouldn't get crazy with it and start overdoing it. The more trades you take, the more risk you put on. So why be up, say, $1,000 or $1,500 or whatever, and then all of a sudden you take one bad trade and then it takes out your profits for today. So the key to trading is really make your profits, hold your profits, and don't lose them. And the way you're going to lose them is by over trading. Or what happens a lot of times is people are up, they get into another trade, they allow greed to step in, and they take another trade, they lose some, they get out. And then they start doing the revenge trading thing to where, I was up today, I lost a little bit, now I'm going to make that little bit back, and then they end up losing it all. So just be smart about it. And when you're up, be done. And then look for another good solid setup the next day, okay? But I just wanted to talk about that pre-market New York session time frame and what you can actually look for quality setups, okay? I appreciate everyone tuning in. For all those that are interested in becoming an elite member, you guys should know, I'm going to tell you now, if you don't, look below down in the description portion of the video. You will find a link there that says become an elite member. You get the trade breakdowns. That's what I'm talking about, because people constantly send me messages asking how they can become an elite member or how they can gain access to the trade breakdowns. That's how you do so. That link is down in the description portion of the video. Look for it. It's right below the Discord link. The Discord's free if you want to join. But anyways, that link to become an elite member is down below in the description portion. Click on that. 2 tiers will pop up. Make sure to choose that tier for $6.99 for anyone that's interested. And you're supporting my efforts as a content creator by me making, solid video content. There's tons of videos here on this channel that you can watch surrounding how I trade, showing you and talking about the strategy over and over and over. But in the elite videos, which is for that private community for $6.99 a month. That's where I walk you through the trade breakdowns, the ones that I post over in the Discord, and talk about in detail about TPs, profit targets, and as well as stop losses, because everybody wants to know, surrounding, say for example, the strategy and how I trade. Where to place a stop loss? Where area am I looking at for placing profit target areas? And what am I looking for when it comes to, certain supply and demand zones? What classifies the high quality one versus one that isn't. So anyways, it's there if you're interested in becoming an elite member. Outside of that, if you're a first time viewer and you haven't subbed to the channel yet, please take the time to go ahead and click on that sub button and become part of the team today. And make sure you turn your post notifications on as well. Outside of that, I just want to say that please take the time to go ahead and click on the like button. Okay, so video content that is made on this video on this channel can reach the masses of people, because I truly want to see people become successful. No one has to follow the way I trade. Whatever works for you, I always talk about. As long as you're consistent, stick with it. Okay, take care and have a great week, and I'll see everyone in the next one.